I just want to pull up another key space essentially, and that's the tire space. Because we have seen the natural rubber prices increase over the last year or so, and that's impacted all that. So let's also pull up a bunch of other Apollo tires as well, one of the other ones, because that's largely trading in the green. And the key reason is because we looked at the space very closely. We also had a conversation with an analyst, which we'll just play up. Essentially, in the tire space, we have seen a lot of positive commentary coming in from the companies. Essentially, if we can look at the revenue growth for the company and pull that graphic up, because Balakrishna Tires is the first one. 13% revenue growth for the company. That's the highest among the tire space. MRF and CEAT also in the double digits, so that's a positive. But the middle row is where it gets interesting. Margins for Balakrishna is at 25%, and that's largely because they operate in the off-highway tire space, which is a very high margin, 25%. And the incremental increase from the last year as well by 50 basis points. For all other tire makers, the margins have fallen by at least 200 basis points. For MRF and CEAT, it's visible on your screen. Profit is another aspect. For Balakrishna, up 13%, while it's fallen for both MRF as well as CEAT. Let's also look at Apollo as well as JK Tires in this aspect. Again, very low revenue growth compared to other peers, and hence we've seen a correction in those stocks. Margins impacted and profit impacted. The other key aspect is the outlook. All players giving very strong outlook. In terms of Balakrishna Industries, while they've refrained to give guidance, they are expecting some market share gains in the off-highway tire space. For MRF, expecting again market share gains in two-wheelers as well as truck and bus radials. CEAT is looking at establishing growth again in Europe, and that's a very big positive for the company. And finally, in terms of Apollo as well as JK Tyre, management expecting growth in their segments that they operate in, as well as a double-digit growth for JK Tires as well. Natural rubber prices, we've spoken about it, they have been declining, but still higher compared to the YOY level. It used to be around 160 rupees per kg, currently trading at 190. It's still lower than the 210 rupees per kg that it was in a couple of quarters ago, so definitely that's a big positive. And finally, I just want to pull up the valuation table as well very quickly, because that is the interesting one, because you get preferences for your picks in terms of growth between 10 PE to 26 PE. And that's price to earnings for FY26 specifically that we've taken. Balakrishna, because of the superior margin profile, is trading there at 25 times, but it has actually fallen roughly 6 to 7% over the last 2 days. And that's largely because they've announced their entry into essentially the passenger car space. Now, with that, that's a low margin business, will impact the company's return ratios, and hence that could be something that investors will have to need with. But apart from that, for another interesting one is CEAT, where they've acquired another entity called Camso in FY25 that will give them entry into the off-highway tire space, and management is very bullish on that. And again, on JK Tyre, where the valuations are rock bottom compared to its other peers. And I think if growth comes back with lower number of essentially rubber prices, it could impact the stock positively. But across the valuation really, essentially how we've titled that, it's very interesting to take your pick in this space as well. We also spoke to Anand Rathi's Mr. Manlesha, who's the analyst there, and he specifically had a couple of very interesting picks and the reasons for that. Let's listen to what he had to say.
Tire space per se, as what is happening is the crude prices have come down. International rubber prices have come down. So from going here onwards, you will see better margins for the tire companies. That will be a positive tailwind for them. And mostly the reflection of the better margin should happen from Q2 onwards, as is more lag in the impact. So in that way, the margins have bottomed down for them, and from here onwards, there should be an improvement on the margin side. And on the growth side, the replacement market should be around 6-7% growth, and the OEM market should be around mid-single-digit growth, and the exports should see a double-digit growth. So that will help them sustain a good top-line growth for all the tire companies. While in the near term, likes of CEAT and MRF will likely to continue to gain market share, and versus compared to Apollo and JK.